Good morning, and welcome back to a great session or opportunity to talk about how to do some budgeting and forecasting. For those of you who've never really done budgeting and forecasting or are trying to build a model to generate prospective sales for a company or organization that you want to say maybe what your plan might look like for the next 5 years. So let's take a look at this. And so really, we have an Excel file here I put together. It's kind of blank, and we need to assemble it. I put some drivers on the right here in column J and some global inputs of such, or sheet inputs at least, on the right. On the top, I put yearly growth rates from, say, 10 to 25%. You can always double click the line here to make the column wider or smaller. Depends what you want. We'll make them kind of wider at the moment. For year one, I just said 10 units of whatever this company is selling. And these are closed sales calls. These are sales calls which are really derived by service line. So we're going to do two types of budgeting here. Top line budgeting, where we're top down budgeting, where we're actually given sales targets by an organization, and maybe they give us this is agreed upon, and you meet somebody in your elevator conversation or your conference call, and your vice president or president of sales says you will need to hit these sales targets. But it's always good to do a bottom-up one that reconciles very closely to that. Maybe you have multiple service lines, service line 1, 2, 3. We'll fix that actually. 1, 2. I want to make this video to really talk about it, because as organizations go through this, we have to understand how to build a prospective miniature gross income statement in that regard. So we're going to take a look at these and see how it looks. Then we'll total out revenue. We'll do various types of expenses that we'll use. We'll use different methods for everything. We'll total out expenses, figure out gross income, and then we'll make a determination on what we're going to do for bonuses. A lot of times when you're starting a new company, bonuses and incentives are very important. So people sign up for things, and there's a lot of energy around it. But we'll talk more about this. And so let's go ahead and take a gander at this. Now, I did go ahead in documentation page, put a style. I'm going to copy a style first because I want to set the style. Oops. So you go to over here, hit the paintbrush. As you see, the little dots going around the word. I'm building this cash flow statement, and year one I got it. Okay. Now I'm going to paint this across all the years. Okay, now we got it. I'm kind of good with that. And let's go ahead and have fun. Let's take a look at all this. Let's set all this to maybe start with commas and no zeros. All right, let me delete this. So the key thing we're going to do is we're going to get a base unit. And these will probably be given to you as your best guess. Maybe you have another spreadsheet that calculates the base units. And then you'll see here, grow units by yearly percentage to the right. Let's go ahead and do that. So we have a base units we just input, let's say 10. And we're going this units by a yearly percentage to the right. So 10% per year. Oh, look at this. I messed up the percentages up here for annual percentages. Let's put those back to percents. So this is different, right? Because this one gives me a global percentage per year, and this gives me an annual percentage. So let's use the global percentage. So equals the previous year times, quite frankly, times the global percentage. But because it's a global percentage, you always have to anchor those. So $K to make an absolute reference, right? $13. And if you see, when I first did that, it's actually multiplied by the 10%, like we're supposed to, but it didn't grow it. So to grow something, you need to put it in parentheses, 1 plus that number to do it. And now it goes to 11, so it grew by 10%. However, you'll notice I did not anchor or make an absolute reference of the C13, which was to the left, because I wanted to float that across years. That way, when I copy from left to right, it will actually just grow. Remember that principle. Anyway, so when I went from year to year, the K13, which is the set variable for all growth, just went across You just multiplied it by, I guess, the 10%. So then if I change it to say 20, it works, everything changes. That was really great. Then let's go to the next one. Sales call. Gather the base year from the table and use annual growth rates. Base year. Oh, here's the table here. You'll see that we have a successful sales calls. That means these are sales calls that you actually closed. So equals sum. Let's go ahead and add those base years. Remember, each of these will probably be another spreadsheet that you derive to determine how you're going to do your sales calls. So we just put equals sum. We sum the formula, and then it says what? Then use annual growth rates. Okay, then we basically go same kind of thing as before. Equals the cell to the left. We're going to float that. We'll make it a relative reference because we're going to copy from left to right. Times, and as you learned from the first one, it could be 1 plus a factor. 1 plus this factor up here. Now, full disclosure, you're going to copy from left to right. You might even copy it down. So let's just put an absolute. Let's make the rows absolute. That way when we copy it down, if we have to use the same method for the growth rate, we can actually use that. But we don't anchor the D, that way we can copy it from left to right and it'll be okay. We copy it down, we'll always read this row. That's a good method, so let's go ahead and copy that. Okay, that was fine. Old school, I hit Control C, Control V. You could have also went out and just dragged it over. Okay, now this one's a little more interesting, top-down budgeting. So if somebody gives you a set of targets, then if you hover over these little dots, let's right-click on these dots. Let's create a note. Edit note. VLOOKUP against revenue table provided by President of Sales. These notes are useful, and you can adjust them and make them bigger. You see, a little bit bigger than you could see in the yellow. So let's put it like that. Now, when I come back and hover over it, I can see revenue by President of Sales. So I have to look up the revenue. And the best thing to do is go to those tables and look at your lookup tables. And here I have table 1, table 2, table 3, year 1 units, and revenue targets year 1. So it's lookup values by year. Okay, remember, tables can be very big and have multiple columns, but we're going to keep this exercise kind of simple. Now to do this, we're going to look it up by year, which we probably should format this here, right, to make it look a little bit nicer, line it right. Or center, either one works. There are people who are really much better at alignment than I am. Let's do it equal VLOOKUP. You could use the function builder or formula. VLOOKUP is a basic fundamental function. Everybody should really know it. Equals V look up, open parenthesis. What are we looking up? We're looking up the year for year 1 revenue targets. Okay, comma. We're going to go to the range in the equipment one page, which is called the equipment VLOOKUP sources. We're going to highlight the range that's relevant here. Then we know it's the second column, so we're going to comma 2 because it's the second column, comma false, because if you look at the condition of the VLOOKUP, it's always false. It gives you an exact match, and we're going to go through that in a second. So it brings back 100,000. If you see in the VLOOKUP table, it's 100,000. So let's go through this formula one more time because these VLOOKUPs can be tricky. Now, I'm doing this on a Mac operating system. So those of you who are on Windows based, you'll see that looks similar but different. It tells you what each component is on the. So if you get the function builder off the calculation line here, you can see is what am I looking up? I'm looking up C12. Or do I want to anchor this? If I'm copying it down, I do, but year 1 will always be year 1. So I could probably put a $ in there if I were copying this down for whatever reason. The table array is the array we did, that we looked to the other sheet and we looked it up. And to do that, it's E9, F13. It wouldn't hurt to put a $ in front of the E, a $ in front of the 9. The reason being is tables move relatively too. So you want to anchor these tables so they don't move in that regard. So now I got the table fully anchored. Well, that's good. Column index is 2. Today I will just leave it as 2. And the range is false. And you can look at the column number is the column number in the table array. So when you think about the column number, we were over here. the first column was year one. The second column was the actual dollar amount. So we had to count over 2 columns and use it. False basically says if you omit it or don't put anything there, it goes to true. And then an exact match. This is a key word. If you want an exact match, then you choose false. So on the VLOOKUP formula, you want to choose the area false if you want an exact match. Well, in this case, we want to know exactly what's going on. And then you can hit the checkbox to be done. Then you could copy the values over. To copy. Let's see, let's try that again. It looks like anything copied. Now, it's going to give me a hard time today. Control C. Copies it right. Boy, look at this. Let me close this. Maybe I'm stuck in function builder mode. That's what it was. I should have hit done. In function builder mode, there's a done button there. And voila, my targets go in. And you can see, they'll go through the targets, and you'll be able to see that the first year was 100, 103, 105. It's really important to put the formulas in, and not just key in these years or just say equal this cell. Because if you say equal this cell, say equal this and do it one at a time, it's not very dynamic. You know, it would work, but it's a bad way of programming, right? You just say equal this cell. You're not looking up something. So if a lookup value changes, or you're basing this off another factor like geography, and you have different targets by geography, it doesn't make sense to do it. The right way to do it is VLOOKUP and to look up the value appropriately. VLOOKUPs are very powerful in that regard. They're super formulas. You know, for those of you who also are looking about that XLOOKUP function, let's delete this. Let's take a look at the XLOOKUP function. I like that. Equals XLOOKUP. It's actually one of the newer functions. The lookup value is year one. The lookup array, if you go back to the, you got to separate by commas, kind of like the VLOOKUP. The lookup array will be what you're looking up against, right? We're looking years up, right? And then it says return array, so comma. What are we returning? Well, we're returning these revenues, so it's doing the returning array. This is kind of useful because if it's on the left, you could actually grab it from the left. Then, if not found, well, that's profound. If not found. That means if it's not found, what do you want to do? That's an improvement, because the other one didn't do that. You would have had to wrap it on an if statement. If not found, we could actually just say 150,000, right? Comma. And you could say, do we want an exact match, next smaller island, wildcard characters? Look at these. Look at these different arrays that you have. Exact match. Well, this makes sense. I never liked the idea of false anyway, but we're just following it. So I want the exact match. Let's see if it close parenthesis. See if it works. And voila, it returns the same value. But you had an awful lot of things. So if I had said year 6. We know that's not in the VLOOKUP table. That's for year 6, right? It will return to 160. What happens if it's not found? If I said this was year 7 on the VLOOKUP one, it would error. Quite a different combination, right? You could actually have fail-safes in here. So let's change the years back. It doesn't really make sense. But how nice was that? The VLOOKUP was able to look at something, and it said the return array. So the return array could have been the array right here to the left. So you can go left or right. So the XLOOKUP was really a powerful feature. And it works really well for these targets that you have to look up. Targets are negotiated, so they don't always make sense, and it's a challenge sometimes. I've been years of budgeting and forecasting, and it's just sometimes things are negotiated for political reasons, or sometimes you just have to do it for bank loans, ABLs, things like that. You just have to do it. Well, bottoms up budgeting is where you go item by item, because at the end of the day, you want to think of what you could really do. Let's take a look at the service lines. We're going to create multiple service lines, but one could be, who knows, whatever your services you provide in your organization, maybe you break it into 3 service lines. Bottom up budgeting for year 1 with multiple sales calls by price, then using annual drivers, see values to right. Let's see. So basically they're saying for year 1, we're going to take the successful sales calls that we have, and then we're going to do price per call, So maybe, for example, you're doing landscaping services, or in your landscaping services, these are the prices you get per sales call. On average, you, without having a big job, maybe you only do those. Maybe it could be plumbing. Seems like a plumber would be more busy than that. Maybe not enough money for plumbing, but electricians, in that regard, small office for one person, depends on the number of people you have. This could be very sophisticated, but let's go ahead and not diverge. Let's do bottoms up. Remember, because you have a small department you're trying to sell, you have to charge 3 service lines, and your boss gave you these top level drivers. Let's try to get to those by using the bottoms up approach. Year 1 multiply sales call by price. All right, so let's just do that. Equals, well, how many sales calls do we have? 8 times price. That's good. That's just for year 1. And we're going to repeat this process for each of the 3 service lines. All right, so it's relative references. I'm not copying it to the right because I'm using the growth rates to go up. So let's look at that. They're all the same. So then using annual drivers, see values to right. So we did the first one. Let's use the annual growth rates equal this. Wait a second. We already have that formula. Did we anchor it properly? Let's see if we copy it down. We already have it. Voila. Oh, this is good. Because we already had the formula and we anchored it properly. It means we can copy it down. All right, well, this is good. This is sales call, sales call, sales call, then annual. So if we did it right, all we have to do is copy this formula down. Voila. Okay, that was beautiful. That's how you build a good analysis. And you can start playing with a lot of these variables. Always make sure too, by the way, that you set your input variables to a color that you will recognize. Then get a good healthy click on it and paint it. That way you can always know what your input variables are. All right, so total revenue, let's total this out, equals sum of these values. That was great. All right, so we summed them up. The commissions, now look at this, we have another note. What's it say on commissions? Look up the expense percentages. The expense table contains expenses that can be multiplied against revenue targets. Okay, so remember we saw this by year? So we go over here, and every year these are expense percentages, so we're basically paying higher commissions in year 1 and then lowering them as we get better. So we're incenting people to be worth this in the first year, and then we're expecting things to standardize and get better off if we stabilize and the commissions don't have to be as high. So we're actually paying a lot of money in year 1 in commissions. I get it, that makes sense. So we're going to do commissions, and we can either do commissions against the revenue. What did they say? Do it again. Expense commissions, revenue targets. Not the revenue number, but the revenue target number. So VLOOKUP, we've done this before. Equals VLOOKUP, open parenthesis, the revenue target. No, we gotta look up the value, the base value, which is year, comma. Let's do this in 2 pieces. Let's first grab the lookup values, and then we'll multiply it by the revenue target. So we'll get one equation working at a time. I think it's easier that way. I also look at, do I have to make this locked and everything? I'm going to copy it to the right. It doesn't look like I'm copying anything down, so I read everything here. Nothing looks to be using the same thing for expenses. So this is a 1-line thing, so I'm just going to copy left to right. This is important. So let's do that. First one was, what are we looking up? This. Then we're going over to Quick tab, expense percentages, highlight the expense percentages, comma 2 because we have 2 columns. The year column, we don't want to return the year, it doesn't make sense, but we want to return the expense percentages in column 2. Then we want to do an exact match, right? We went through that just a minute ago, so we could do false. You saw how we had a little aid there, and then you hit the checkbox, and it returns you back to the thing. So we got expense percentage. Oh no, it came back 0. But if you look, really not 0, it's 45%. We're not going to put percentage here, we're going to put commas. It's going to be 0 at the moment. And what we do is we multiply this times, just enter asterisk for times, revenue targets. So, okay, what do we need to anchor to copy this? Only thing we need to anchor here, because we're just going left to right, is the $ in front of the E to lock the range. We don't want the range moving. technically, I think that's really, as a minimalist, you probably get away with that. I'm not copying it down so it shouldn't shift. But you know what? I always like to just a good habit rather than being super clever, smart. We're trying to be a minimalist. Some of the some people watching this are trying to be minimalist. You might be more strategic about that. I'm going to be lazy and just hit the checkbox and say no, and copy it to the right. Okay. You could also hit the function builder. I didn't like that because it wants to insert function over, because I put that part here. If I remove this, watch what it does. Then we go back to function builder. Should auto populate, and it does. You see all the values in the function builder. Then you say done. Function builder and close it, and you're finished. But then we just gotta times it. Remember, you can also copy the other direction. Control C, enter, and copy it back. Now material, it says here, use the units to derive the cost per item based on a set year one for future periods. Oh, I see. So we need to go equals, I like to put these things in parentheses, this value divided by the units. So basically I get a cost per unit, then times my keyboard, times the new units for the year. Every year units are going up. So that's a good conversation. I'm copying that right. All right, well that's okay. And I hit the checkbox. I like the checkbox. It's good on the formula bar. And now it grows. It grows logically because it's cost per unit. And you can see that the cost per unit the first year was really 100 and it just increased. All right, I'm good with that. Copy to right. You don't really need to worry about absolute references in this case. We're not copying it down. The next one says use sales call to derive the cost per unit. Use sales call to derive the cost per unit based on a set year. So, well, sales calls, which we calculate up here, cost per unit. Let's just say the set year was also, let's say $2,000 for the set year. So set year, the beginning year was 2,000. So for everything going after that, we would use the same methodology. We would just basically take equals. I like to put this part in parentheses, divided by the sales calls, which is different than a unit. Close parenthesis. We're just copying this left to right, so we don't really need to worry about anchoring anything in that regard. Times number of sales calls in the current period, and voila, it goes up using the same logic. Call center. All right, so we got our call center expenses. Then our rent. What is rent based on? Use square footage to derive cost. So over here on the right, we have square footage and we have cost per square foot. It looks like it's a straight line formula. Let's do two things then. Let's we can either just simply say equals 2,400 times this value here, but you know when you copy it from left to right, it's not going to work because it's not anchored, right? It just errors, which is a lot of sense, right? It goes from L, that's the relative nature of Excel. In this case, I'm just going to do the first year, and I'm going to cheat and straight line it by saying equal to previous year, and then whatever the first year is, it goes over. That's another way you can kind of cheat rather than do that across the years. But let's not be lazy. Let's just go equals this value times the second value, which is the cost per square foot. And let's anchor it. There's no reason not to be lazy. It's early in the morning. We're wide awake. We're great. And good programming always pays benefits. We want to make sure that you do this. We got this. We anchored it out. It's just one set. Square footage, basically a straight line number. You could have straight lined it either way. Variable expense. Calculate something based on a set of global costs against units or sales. So here, look. Here's a global cost. So just calculate something by a global cost variable. All right. We're going to do it against sales calls. Some kind of variable expense. I don't know what this might be, but it seems like sales are a very daunting thing, so you always have to do it. So we're going to multiply that 30 by the sales call, and that's like a global variable for this variable expense. So that's equal the sales calls. We're not copying it down, we're copying left to right. So the only thing we really need to anchor, you should almost always anchor global variables. Go over here, pick the global variable. You notice I put the dollar sign there. If you have a keyboard or it's not a Mac necessarily, or you know how to shift to get to it, F4 key will lock these in automatically for you. you hit the F4 key, but in this case, I'm going to just type in the dollar signs. And now I have a variable cost controlled by one variable. So if I change the variable here to 35, my costs go up appropriately. Everything's locked in. We total out the expenses equals sum. We total out the expenses. And then we copy that to the right, and we're done. Now this one down here is a little interesting. If no bonus paid, then salary increases can be derived via the salary table. So let's take a moment and think about these salary expenses derived via salary table. Let's take a look at that actually. Anytime somebody says derive something, well, rather than jump in, let's look at salary table. Oh, look, year one salary increases. We want to understand the salary increases. So we're giving good salary increases in year one. Well, okay, I get that. Remember, you're heavily incenting in year one. Okay, but only if they don't pay a bonus. So bonus is usually paid if you meet your targets. Should we justify this first? Okay, I'll put it in the middle. So salary increases only when you get your targets. So this is going to be an if statement, because you're going to look and say this is yes or no, and then you're going to look up the value based on the result of that outcome of that one. So, for example, if they met their targets, it means they're getting a bonus and they're not getting salary increases. But in this case, they did not meet their bonus, so the company's not paying big, heavy bonuses. We don't have a bonus line calculation on this model, so we will be giving salary increases. So let's go ahead and do the formula. You might want to just do it kind of in the one that you're looking to see where it returns to cheat and copy it left and right. Remember earlier I showed that? We go equal if, remember you can use a function builder. The cell above, which is n, equals, in quotes, n. So if it doesn't meet it, we already know that we're going to do a VLOOKUP formula. Now sometimes I like to do these in two parts, do the VLOOKUP and then merge them in the placeholder, but in this case we're just going to write it out. VLOOKUP, in the morning I probably won't make a mistake. You saw that when we looked at the table, it's by year. Then remember we're going to copy right. Then we're going to look up against the range, which is the salary increase range, because we definitely need to anchor things. Let's finish formula first, anchor last. And we're going to pull it from the second column. We already know that. Comma, false, right? We want to make sure that it's false. And that's the end of that lookup table. Remember, though, we're in an if statement, so we're not done yet. So that's a first condition. First condition is the VLOOKUP that we just wrote. Then what you have to do is you have to finish the if. Well, what's the alternative? Well, if they got paid a bonus, then you're giving them no salary increase. 0, 0, close parenthesis. And voila, there's your, maybe I've said it's percent because we're going to show what the salary increase percentage is, and we'll do 2 decimals with percent. All right, we have to anchor the range. Always anchor these VLOOKUP ranges because they slide or they'll move if you don't. Put a dollar sign in front of everything to anchor them properly. And now we have that anchored. So that returns that value. Now when you copy it, you copy it, Control C, Control Paste, just like the fast one. Yeah, so let's check it. Change one up. Yeah, anytime you change it, the value changes. You can actually get it. So in year one, if you don't do it, they'll be giving a 5% increase. So even if they don't get a bonus, maybe a bonus is 5%, they'll still get a 5% increase. So it just depends, right? Whatever that bonus percentage is. I've been in organizations that just had the phenomenal bonus opportunities. You could also make sure you put these things in accounting format. Sometimes accounting format like these individual rows to be, we're not going to make decimals. Oh look, it doesn't fit. So if it doesn't fit, you want to make it a little bigger. You can actually double click the column. But we also could squeeze it down a little bit. I don't want the decimals. We'll do the first rows of every section in accounting format. I kind of like that. And remember, get rid of the, I like to do formatting last in case I'm copying things down. I'm going to do the first, and then I'll do the top rows in a accounting format for this exercise. And then the bottom totals as well, just to smooth it out and make it a little bit nicer. Just get everything set. And remember, you could also, and we're just about done with this analysis. With the fun analysis, I was able to put together a good budgeting exercise for a good sales budget. Certainly not something a financial analyst might dive deeply into, but we showed multiple methods of actually getting to things and using drivers in all kinds of ways, and doing ratios and percentages and VLOOKUPs and XLOOKUPs. You know, we put an XLOOKUP here, which is really not a good policy, so people put it in the comment bar. I just wanted to show it. We really should, if you're going to stay with VLOOKUP, stay with the VLOOKUP, or use the XLOOKUP and just stay with the XLOOKUP. I just wanted to give an example. So really, you should be consistent in your formulas. So we're going to get rid of that because the inconsistency is not a good thing. Stay with the VLOOKUP. There are better opportunities for XLOOKUP if you're going to do the XLOOKUP. I just wanted to show an example, because maybe the column is to the left and you want to pull it. That's always good. So sometimes you don't have control of the column that comes out of the system, and you have to automate. You don't want to shift reports around all the time. Sometimes you get things from a server or something as a report, it just comes out a certain way, and sometimes you just got to go to the left. This is a very powerful tool to pull things from the left. Well, I hope that this helps, and this learning video definitely covered a lot of depth here and things that you can do. We didn't include gross income. Equals revenue minus expense. All right, they lost money in year 1. They lost money in every year. Right? They made money in year 5. I don't know about this business plan. You might have to play with some of the drivers to say, maybe this is why you do these variables, right? Maybe we have to increase it by 20% in year 2. Look, see, the 20% year increase in year 2 gets you profitability in year 4. A lot of people maybe increase this to 20% as well. Nobody's gonna let you really get away with it. It's now profitable in year 3. Okay, that might be more realistic. A lot of people want you profitable sooner. That's always a stretch that you have to do. But that's why you have variables, and to play with it and to go into meetings and discussions and say, hey, maybe we actually charge more per price per service call, and you talk about bottoms up and top down and what they're negotiating, and you have a squeeze and you come to some agreement in the middle. Maybe you need more unit growth. Maybe you can get 22% per year. Depends on your capability to actually be able to do things. So it all changes the numbers, and you're able to play with these models that are fully dynamic. So it helps have a model that you can take, and you always know where to do it. And if you send it and people know that it's an input, then you're able to hand it to somebody, and they can play with the numbers themselves, because you know you have a standard how to do things, and they can do it. Probably better off protecting a lot of cells too, because what happens is people start keying into these cells, so make sure we don't mess those up. Hope you enjoyed the video.